Hi everybody, it's Tip Tuesday, so here's your tip of the week. I'm Jeff Vogan at Premier Retirement Planning and Wealth Management. And I get a lot of people that kind of have that idea of FOMO. You know what a FOMO is? The fear of missing out guy. And today we're going to talk about risk, managing risk, understanding risk, and not taking too much risk. In an interview after the first market big crash, that we've had lately, and that was in the 2000 to 2001, 2001 and 2 era, Lou Dobbs did an interview with AARP magazine, and one of the quotes that I just really love and really like to live by, especially when we're talking about retirement, is don't risk money in the stock market that you cannot afford to lose, period. If you can't afford to lose it, or if you have to go back to work for 5 years to wait for the market to come back, it's probably not a good place to put money in the stock market. Now we know that over the last 100 years or so, the stock market has averaged the best rates of return in most asset classes, unless you had some sort of an alternative investment that did better, but as a broad asset class, the stock market does outperform. However, in the last 20 years, since the stock market has had two big corrections, even though we've been on a record-breaking tear the last 10 years, the stock market's only averaged around 4% a year compounded annually, not the 10% that it's used to. Riding the roller coaster at an amusement park may be fun, but riding the roller coaster with your retirement dollars may not be so fun. So respect risk. It may be time as you near retirement to start paring back that risk or to start reallocating assets into things that can actually pay a more guaranteed rate of return. Even bonds can do that, though. Although the interest rates have been down, bonds have been known to be a more safer play. That's safe bonds. Not high yield bonds or junk bonds as we know them, but the more safe bonds. Another alternative would be fixed index annuities, which have average return rates lately of much higher than bonds, yet they're as safe and in many cases a little safer because of the insurance and the levels of protection that you have on those. If you're interested in finding out what your risk tolerance is or if you're doing the right thing, you ought to consult with your financial advisor. If you don't have one or would like to visit us or inquire with us, please get in touch with us. We'd love to help. And that's your tip of the week. Respect risk and don't take too much of it, especially if you're ready to retire or if you're already retired.